It's just that there's a lot of foundational type information and function skills, whatever you want to call it, things that you need to know what it's about or how to interpret, how to utilize these tools so that when you go to trade, you're going to be doing something productive and not just guessing, right? So that's the goal here. So we've been talking a lot about charting. You've been seeing a lot of the basics of the charting. So what I want to do now is I want to start showing you some really cool tools that you use within the chart. I'm probably going to have to make this into like maybe 3 or 4 different videos altogether just on this subject. And what's the subject? It's indicators, metrics, and strategies. So to give you an idea, I've got some of these like preloaded, and I'll just walk you through it. This is a supply and demand zone, and let me move this over so you can see it a little better maybe. Okay, so what you see here is this top band, that's the supply zone, and then you got demand zones. Like back during this phase, this was the demand zone. Well, now it has changed, it has shifted. But this is actually a strategy. Now this is a tool. You can simply turn it on and off. See the little eyeball icon for that? So you can turn it on and off. But why would you want to use this? Well, when the tool, and you can do this manually, the tool's just helping you. When you've identified your supply zone and your demand zone, basically what you're looking at are like two different levels or layers, if you would, of where the price is going to bounce back and forth between. And so if you look at this area right in here, that's what you're seeing, is that when this supply zone was identified, okay, and if you understood the tool, it would be helpful for you to understand. You'd look at it and you'd say to yourself, well, the chances of this stock or this ETF going up are really pretty low, but you're pretty high probability that it's going to drop in price. So what does that mean for you as a trader? You know, if you were right here, and like if this were me, I'm not telling you what to do. I'm just telling you what I would do for myself. Is when I saw this candle formulating right here, is somewhere in this area right here, I would have placed an option trade, and it would be called a put. A put is a trade that you believe the price of the security is going to go down, and you make money when it does that. If you were just trading in stocks, we would call this a short, but with an option, you would call it a put. So anyhow, so you could place that trade, and then what you could do, or what I would suggest doing for myself, is that I would put my stop order right here at this value, and I probably would have been getting in somewhere around here by the time I looked at it and realized, yeah, okay, this is going in the direction I want. And then from there, it'd be a matter of just letting the trade play out. And then you see like it comes down to here, but now you notice it changed colors. So that's giving you an indication that it's going to start to bounce back the other way. Now, did it go all the way down to the demand zone? No, but it doesn't have to. The idea is these zones are giving you the margin area that you should be, that you should expect the security to trade in. So what does that mean? So if to give you an idea, all right, I'm going to use the price range tool. If I would have gotten in right here, and if right about here I would have thought, oh, this thing's going to turn around, that's what this is showing you, is that was a $15.33 minus, meaning it was going down, but that's $15.33 per share change. Now, if that were an option, keep in mind, an option is you're evaluating all this off of 100 shares, because each contract in an option's 100 shares. Um, we could do the math and come up with a precise number. What I could tell you is that trade would make you some significant money. Um, and we'll get into how to calculate that later. The idea right now is I want you to understand these tools that are available to you that help you out. And one of the tools is the indicators. Now, there's also some this would actually be more of a strategy, but below the chart they have indicators, and we'll get into that soon. But the idea is that would have been a blessing of a trade to catch, right? And so let me erase that. So then if it turns around and you see, well, okay, it's starting to go back up, you would place a call. In stocks, we'd call it a long order. And again, you're going to follow it up. Now, say you follow it up to here, because if you look at these wicks, you're getting a good idea. Well, it's still looking to be climbing. So let's use this price range tool again. So if you turn around and reversed your position and let's say you got in the middle of that candle and you stopped, that's almost a $10 change in price or delta. That would make you some significant money, especially in options trading, because you're leveraging, right? And then, okay, and then it turned around again. And the idea is that as you're trading this throughout this life cycle, because when this is happening, you're not seeing all this stuff to the right. It hasn't happened yet. But it would give you, if I saw this engulfing candle, if you would, going in the negative direction, then I would probably place a trade somewhere right around in here and ride this out. Now, I would be expecting this price, because of these two zones, to come down here and try to touch this demand zone. And you can see right here, it almost did. It almost tried to do it again. These are very identifiable setups that you could trade on. And just this one area right through here that you've seen so far, you could have made some really good money in a relatively short period of time. Now, let's look at this. So what happened here? Well, the tool recalculated and it came up with a new demand zone. So if you jumped into this trade here, this went up, as you see, and it's hitting the supply. And now you would expect it to come back down. Now, would I expect it to come back down to here? No, because this demand zone, again, it's going to act kind of like think of like two ping pong paddles, right? Each one of these is smacking the price in the other direction. So, in other words, when this stock is trading up in this zone here and you're watching this on the candle, this is just for me, I would not place a trade on this, a call trade, because a call trade you'd expect to be going higher. If I was doing stocks, it'd be a long trade. It's just two different terms for the same thing. A call or a long means you think the price is going to go up. A put or a short means you think it's going to go down. But here's the thing: is that when you see something like this, right away you realize you're not going to get as much travel, as much volatility on this security as you would have here. That doesn't mean you can't make some money on it, but you're not going to make as much. Okay, that's just one tool. But a lot of people, that's what they trade to. It's a very powerful tool. So let's take a look at this one here. Now this is just another way, another representation, if you would, another strategy indication. So if you went back, and that was the other thing too with these tools, I guess I should stress this. See, is anytime you're looking at a new uh, strategy or new indicator, look to see how it correlates to the price movement of what's been going on in the past, so that you get to where you understand. So if you're trading this and all of a sudden that you saw this green pop up, well, if you've looked at this tool long enough, you'd realize, oh, that's a market shift, and I need to switch my position. If you had a put going on over here, you would switch it over to a call, and look at how much I mean, you could, if you rode this, I mean, what are we looking at here? Almost $17 change in price. You're talking thousands of dollars that you would be making off of that. So these tools are very powerful. Do I suggest one over another? No, I suggest you find the one that is comfortable for you in the trading style that you want to trade in. Now you got to realize some of these trades. Now I'm on the 4 hour window, so some of these are multi-day trades. Personally, I don't like being in trades overnight, and there's reasons for that. And I'm actually going to do a video on that soon. But anyhow, but the point being is, find the tool that you're comfortable with. Um, some of these are as simple as this one here. The EMA is basically, it's a moving average line. And so again, look at what it presents on the screen. Look at the history of what's going on, and then you ask yourself, well, what am I gaining from this? Because I really shouldn't have to explain it to you, but maybe you're still getting new to all this. But what do you see happening here? When the stock is above that moving average line, the price is going up. Not, well, here it went below it, so it changed. But the point being is this would give you pretty good confidence that you could trade it, and that you're going to make money because you're placing the right type of trade. That's the point I'm trying to get at here. And again, you could go back and look at the history. Now with the EMA, there's here. Let me show you, teach you a little bit more about it. You have the settings, and on the settings, so you can turn all these on, and these are, let me click OK. So what you have is you got the 20, the 50, 100, and the 200 moving averages. And the idea is you want to try to figure out which moving average is closely tracking to the securities chart that you're looking at. And that's the one that you want to go with. All right. So if you look at here like this blue line, well, that's not really tracking to it. So let's take that one off the table. Okay. And now you could look and say, well, the red one seems to be tracking best. So you can go back again. And what's nice is you can change these as maybe the circumstances, the situation changes. But that's a pretty powerful tool. And if you notice, like right here, these dots are indicating a a break in structure, or a change, the shift in the price action. So like up to here, from here to here, the price was relatively just going down. But notice from here after this, it started going up. So this tool is offering you a lot of good information, and it can help you trade and be profitable. Now again, you can change the timing factor on this. Maybe you want to look at the 15-minute one, and it'll help you a little more accurate. Now, once I was trading on it, I would probably go down to the 1 minute, but I like to keep a close eye on something once I'm in it. But again, I don't plan to be in it for very long, so that's just something to bear in mind or keep in mind. But this is a really cool tool, and it's built into your charting system. Now, do all charting systems all have the same indicators? No. It just depends on whoever put the indicator, the chart together, and I imagine a lot of times they're paying for these different scripts that they're using to create these. So anyhow, I'm going to stop this for now because I've gotten long-winded and I need to start the next one. But this gives you a good idea of some of these type of tools, and I'll show you some more.